Strategies to help you navigate to and through retirement with the help from the Vincent Financial Group.
Market volatility, probably not as bad a thing as you might think. Volatility actually creates opportunity.
Get more at retireatlradio.com. Now, Retire ATL.
And we're here with CFP and investment advisor Aaron Vincent and CFP Matthew Decker, helping you retire on your terms by addressing three key pillars: tax planning, risk management, and determining your income strategy. My name is Mark Owens, and welcome out to Retire ATL, all powered by the Vincent Financial Group. Aaron Vincent, Matthew Decker, great conversation last week as we talk about the three pillars of a retirement strategy. Great conversation about risk management. You can hear that on the Retire ATL podcast. But today, let's talk about that dirty little word, taxes.
Taxes.
My favorite.
You may not have a health or a wealth problem, but everybody's got a problem with taxes. So let's talk about how you help adults getting close to retirement limit their taxes. What are some of the key considerations?
Well, it's going to start with, number one, figuring out where you are right now. We talked last week about that roadmap. If you want to know where you're going, you got to know where you're starting. You got to know where you're ending up. So a lot of people, for better or for worse, have been conditioned to do one thing really well as it relates to saving for their retirement. Aaron, I'm wondering if you are picking up on what I'm putting down here. What's like the one thing that you would say, hey, if you want to have a good retirement, this is the easiest thing you can do. Just make sure you always do it. What would you say that is?
I'm going to throw it out there. I'm going to say contribute to your 401k or IRA because you're getting a tax break.
Man, it's almost like we're business partners.
Man, did I get it right?
It's almost like we have this conversation from time to time.
Have you thought about helping people with their tax strategies?
That'll never work.
Man, that's a good idea. We should build that into our business model.
We should do that.
Oh, wait.
We
it's
should
one
make
of the three
one
pillars.
of our three pillars.
Yeah. That's exactly right. I think that if you're listening to us, you're driving down the highway and someone said, hey, what's one thing that you should do if you want to retire well? I got to believe contribute to your 401k is going to be on that list, maybe top 5.
Because I also get a tax break this year, obviously.
Right. And maybe I get a company match.
Yeah.
So, of course, I'm going to max out my 401k, contribute to my 401k. Well, here's maybe the con to solely focusing on this idea of contributing to tax-deferred vehicles for a tax break today. And in fact, we'll just take it one step further. Most CPAs, if you go to your CPA and you're like, hey, what's something that you can suggest that I do this year to lower this tax burden? It's killing me. What are they going to tell you? The first thing they're going to ask you is, well, have you maxed out your 401k?
Yeah.
Have you maxed out an IRA?
Mm-hmm.
Have you taken advantage of the deductions that are there to be had as it relates to your retirement savings? It's like one of the top questions they're going to ask you.
Yep.
The problem is when you contribute to those tax-deferred vehicles, you are making a handshake deal with the government. You are saying, Uncle Sam, I don't like how you're taking all this money out of my paycheck. I don't like it. And so I got an idea. How about you don't take money out of my paycheck for all these funds that I'm going to invest in my retirement account? And Uncle Sam's like, okay, yeah. I think we can come to an agreement here. But I tell you what, if I'm going to let you not pay taxes on that money, I'm going to need for you to pay it at some point, right? Because this is not just like a free ride. So if I let you defer the taxes today, then how about you pay the taxes later when you start taking money out? And most people, myself included, when I was young, they're like, yeah, great.
Yeah,
sounds good.
Stop the pain now. Whatever I can do.
Stop the pain right now. I don't need to ask any more questions. You're going to let me pay less taxes today? Great. But there's a little catch in there. There's a catch in there because there's a variable in that equation that is undefined. Aaron, what is that variable?
I know exactly what the variable is, Matt.
What?
The variable is, at what rate do I have to pay taxes later when, Uncle Sam, you say this handshake deal, you'll let me save taxes now, but I'm going to pay later. What percentage am I going to pay later?
Right. That is the question.
That's the question.
And the answer is whatever the tax rate environment is when you take the money out.
Another way to say it, Uncle Sam says, whatever I tell you.
Ooh, yeah, whatever. Hey, whatever I need.
Yeah, exactly.
When I know how
My
much
money
I
now.
need,
Yeah.
I will tell you how much you got to pay.
I am the captain now.
Exactly. Exactly.
It's my money now.
That's right. So, history lesson. When the IRA, when the tax-deferred vehicles came out, we were in a historically high tax rate environment. I mean, tax rates in like the top marginal rate around like 60%. Okay.
We're in like the 30%, 35% now.
Right.
Yeah.
So when this handshake deal was first presented to the public, it was a no-brainer. Of course, I will defer especially if you're a high income earner. You're a high income earner 40 years ago, and your top marginal rate's 50-something. Depending on the state that you live in, it could have been a whole heck of a lot worse. And Uncle Sam's telling me I don't have to pay that? Well, that sounds like a no-brainer. And guess what? It was.
Yep.
Because if you were deferring dollars when the top marginal rate was 60+%, and there's not very many of those people left anymore, but if you were one of those people deferring dollars at that top marginal rate north of 60%, well, presumably you're drawing it down today. You're drawing it down today, which means you're drawing it down, and what's your top marginal rate? You're in the 30s. Okay.
But isn't that like taking a gamble, if you will? Because you didn't know at the time.
Yeah.
You're paying that 50%. You're just hoping that when you're ready to draw down, it's going to be lower.
That's
but
right.
There's no guarantee.
Absolutely.
There's no guarantee, but man, those rates were pretty freaking high.
100%.
Okay. So like if you're looking at the tea leaves, you're kind of betting on it not getting worse.
Right.
If you're looking at the tea leaves today, let's just outline what some of those tea leaves might be. That might be a good conversation. Okay, so number one, tax rates are about as low as they've ever been. Now, that may hurt you.
Mm-hmm.
That little bit of
If
information.
you think you're paying a lot in taxes now, it's only going to get worse.
I mean, it's about as low as it's ever been. If you can do it right, well, maybe not right now. You're probably driving, so don't do it now. But when you have the time and you're in a safe environment, go on Google and just Google top marginal tax rate chart, okay? Top or historical top marginal tax rate chart. You want to get the historical figure. And what you're going to see is going to blow your mind because it's exactly what I'm telling you. We are in some of the lowest top marginal rate tax environment that we've ever seen. In fact, the tippy top of the top marginal rate, north of 90%.
Ooh.
I believe that was 1945,
historical,
1944, 1945.
Yes, sir. Wow, you were spot on. I'm not driving. I was able to look it up.
Okay.
We got Mark fact checking this. I love it.
1944, 94%.
Woo! Hey, sign me up for that.
Yeah.
No thanks. Okay, so hey, if the 401k came out in 1944, you'd be next to brain dead if you didn't take advantage of that deal.
Yeah, of course.
If you're in the
defer.
top marginal rate, okay? But now, I'm telling you, when you have the time, pull up that chart. It's going to blow your mind. And the question you're going to ask is, man, should I be deferring my taxes? When I look at this historical chart of tax rates, should I be deferring my taxes? It's a good question. Okay, so that's one of the tea leaves. One of the other tea leaves, Aaron, you want to riff on maybe spending?
Oh, man. I could riff on this for a while.
First of all, let's give out that number. We're having a great conversation about your tax strategy right now. And if you're worried about your taxes and how much you could be paying in the future, want to get ahead of it, 770-741-0120 to reach out to the team at the Vincent Finance Group or, of course, retireatlradio.com.
Yeah, let's pretend for a minute that all that you just said didn't exist. It's true. Mark just fact checked us. It's all true, but just for a second, humor me. Let's imagine there was no precedent for a top marginal tax bracket of 90+%. Let's just look at what's going on all around us right now, like literally with your own two eyes. There's no need for Google on this one. Government spending. I mean, the amount of money that our government is spending is through the roof. I mean, it's literally impossible for our government to spend less to the point where they can reverse action on what's already happened in the course of spending in the national debt, et cetera. There's just no, even if they somehow repaired the spending rate that we're on, it's literally mathematically impossible for them to spend less enough to reverse the amount of national debt that we've incurred over the past decades.
I think they're doing pretty good.
You do?
Spending?
Yeah.
Government spending? They're
Pretty
doing
good at spending?
Yeah.
Yeah, they're doing great at spending. They're experts at spending. And I could go on and on, into the details about how much they're spending in government programs and how much this one costs and that one costs, but it won't be news to you. You can see the headlines. Social Security, is it going to go bankrupt in the next 10 years, and all the stuff that goes with it. The point is, regardless of historical tax brackets and all that's happened in the past, the spending that's happening now just means there's only one way out of that. There's only one way out of all the spending happening now, and that is to tax us more, to dig their way. That's the only way.
Now, there is maybe a caveat out there that we could throw out there.
Let's do it. Throw it
because our president has said things like he wants to increase tariffs to offset taxes. So, maybe there's some ideas out there that don't mean directly that we, the American people, are just going to get hosed on this. But if you're reading the tea leaves and if you're placing bets, man, it's a pretty safe bet to say that unless something like a Trump tariff just totally comes in and kind of like does a board flip. We were playing cards last night, and my youngest, Marshall, is 8 years old, and he's like, Dad, I want to play Uno No Mercy. Okay, so we're playing Uno No Mercy, which is a horrible game because it forces you into just an unmerciful, like there's just no way out of you're going to hurt your kid's feelings. Okay? And so if you get 25 cards, you're out. Well, my middle son, Warren, hits Marshall with a draw 10.
Oh, geez.
And so he's like counting his cards, and he's like, I got 21. It's my turn, and the only card I have to play is a draw 4. And it's a draw 4 reverse card, right? So he just gets it from both sides. Draw 10, reverse draw 4, and he looks at me. He looks at the cards, and he just shovels them all and walks away. Kind of like the card board flip. So unless we get some kind of like Trump board flip on this tax situation, the tea leaves are going to say, man, we are going to bear the burden of our irresponsible spending. And in a historically low tax environment, that means taxes probably only going one way.
Yeah, and let me just say this as well, because that's totally right, Matt, and I agree with all of that. However, I think if a person's financial plan or retirement plan or tax plan or whatever you want to call it, whatever your interest is with this conversation, if it depends on and it is totally hinged on, well, if a politician does X, then Y. If that's part of your plan, you've already lost the game.
I think we've actually got a great piece of audio that says exactly that.
Yeah. I hope we said that before.
President Trump on NBC News talking about the tax cuts.
We're going to be extending as soon as we can the Trump tax cuts because, they're coming due and they're very substantial for people. And it would be I think it will anger a lot of people, frankly, if we don't get an extension of that. That's what led us to one of the greatest economies ever.
I mean, is it fair to plan on him extending these cuts, or are you planning for these not to get extended? Like, you don't have the crystal ball, but what's your take?
Well, I think you have to hope for the best. Mm-hmm. You have to. I hope he does. I hope this works out.
Let's go back to what you said last week.
We got to plan for the worst.
Last week, you said something about risk. We were talking about the market going up, the market going down. This is going to be the year. And you said something profound. You said, if your plan is a 1-year plan.
Yes.
Or even a 2-year plan.
Or a 4-year plan.
Or a 4-year
about,
plan.
Presidential.
Yep. Yeah. It's not a plan.
It's not a plan at all.
And that's kind of what's happening here with the Trump tax. Like, hey, none of us want to pay more in taxes. Right. But if you're working with us, our goal is not to say to prognosticate on Trump's tax cuts. That's not our goal. We can't do that. No one can really do that. Our goal is to say, all right, you're at point A now, and we know what your point B looks like. Let's just say if we make no changes at all, if you just continue on status quo with what you're doing, and we have your retirement goals, how much are you going to pay in taxes in and through retirement? Exactly. We can come up with that number for you.
Yes.
It's not difficult for us. We can tell you, hey, based on today, and we take into account Trump's tax cuts, okay? Yes, we do. Great. But look, your retirement hopefully is going to last, 20, 30 years, maybe more. So we can tell you if you make no changes, here is what you're going to pay in taxes in and through retirement. And newsflash, it's probably going to be your largest expense.
It will be. Taxes will be your biggest expense in retirement.
But people don't realize that.
No, they don't.
A lot of people think that a lot of adults, as we get into retirement, we think that our taxes may go down, or, I don't know where this information came from, but I've heard stories of people saying, oh, wait, but I'm retired. I'm not working. I own my house. Taxes are just going to go away, right?
You would think.
Yeah. 770-741-0120. Let's talk about some of the tax strategies that you offer from the Vincent Financial Group.
This is a great opportunity for Aaron to tell one of my favorite stories.
Uh-oh.
Because you may say, you may call in, all right, 770-741-0120. You start the process. You sit down. You're like, I want to know how much I'm going to pay in taxes.
Yep.
All right, great. We can tell you that. We can show you that number. Well, then the follow-up question is like, well, what can you do about it?
Yeah.
What can you do about it?
Fix it.
Fix it for me.
Hey,
there's a way to fix it. But are you sure? Are you sure?
Right.
I'd love to hear your story here.
Yeah. So, this topic is one that we've had for years, and we have it so often because, again, to Matt's point a minute ago, taxes will be your biggest expense in retirement. If you've done a good job saving, if you saved enough money to live a lifestyle that you don't have to work anymore, and so this pile of money that you've saved will now become your income stream for 20, 30, 40 years, then you're going to pay a lot of taxes. Well, I love analogies. Sure. Analogies help, right? Because taxes and a lot of these conversations that we have with these topics and these concepts feel so nebulous, and they feel kind of like, this certain terminology and vocabulary, and it's not every day.
This isn't an analogy. I've met your parents, and I know this story is true.
No, it's not an analogy. But I needed to find something that applied to give kind of like a story behind it. And so this is what I came up with, or this is what I remembered from my childhood. So whenever I was a kid, believe it or not, I got in trouble sometimes.
I believe it.
Yeah, I know. What? It's crazy.
I believe it.
It's got a halo.
It's weird.
I work with this guy. I believe it.
And when I reached a certain age, my parents gave me the option. They said, hey, you did whatever you did, and we're good parents. And
Sold the dirt bike.
So, yeah. So you are going to have to pay for that. Like, there's a consequence for that decision. We're going to give you the option, though. You can either choose to get the spanking that you know is coming, or you can choose to be grounded for the next week. It's your choice. We'll give you some time to think about it before you go to sleep tonight. We want to know, are we spanking you, or are you going to be grounded for a week?
They made you go to sleep on it?
No, it was before bed that night. It was like,
okay.
But,
I was about to say, my gosh, like that's a whole nother level.
Night pacing.
Oh my
psychological
gosh.
punishment too.
Pretty heavy for a 10-year-old.
I forget. This is a long time ago. I forget the length of time, but the choice was mine. Do I want spanking, which, that's a tough one for a kid. I'm 10, 12 years old or so. Man, the spanking is going to hurt.
Yeah,
I mean, that's just going to suck. It's going to hurt. Yeah.
Just the back
My
of the
parents,
thigh.
They didn't take it easy. Like, if they needed you to feel the consequence of a bad decision, you were going to feel it. So, yeah, so there's the pain. Like, you're going to choose the pain of right now. Oh, it's a tough one. Or you're going to choose the purgatory of pain of just the over and over again. Every day you wake up, your kids are playing outside, your friends are playing outside, you got free time, it's summer, you're enjoying it, and you get to sit in your room and look out the window and watch them play because you chose the grounding because you didn't want the upfront pain. I mean, that's a tough choice to make. Well, that's basically, in a nutshell, Mark, when you say, well, what can you do? What are some tax strategies? I'm here to tell you right now that we don't have a magic wand, and we can't just say, hey, come work with us, and no longer do you pay taxes anymore. That's just not real. There are definitely strategies that will help mitigate the amount of taxes that you'll pay. To Matt's point a minute ago, we can actually calculate based on how much money you've saved and what kind of investment vehicles it's in, tax-deferred or all the different ways. Tax-deferred is the most common one. We can calculate how much in taxes that you'll pay, and we can stress test it based on different, tax rates, how much you'll pay over your retirement, and we can determine what that tax bill will be.
The grounding.
That's the grounding. If you choose that path, you're just going to, if you don't want the upfront pain today, you're just going to choose to stay that trail. Go ahead, Matt.
Well, I'm just going to say, by the way, that's the default path.
That's it. Oh, yeah, that's a good point. That's the default path. That's the one that if you don't have a plan for your money, you fall into the government's plan for your money, and that is that you choose the grounding. Who wants to feel pain now? Who's going to choose pain? I'll raise my hand and say, yeah, I want the spanking. If you don't even know it's an option, you're definitely not choosing it. Well, so the point is there are strategies. There are things that you can do to mitigate those taxes that you're going to pay over a 30 or 40-year period of time, but not without some pain.
You got to choose the spanking.
You got to choose the spanking.
We've played some audio on the show before of Ed Slott.
Yeah.
And he calls one of the things that we're talking about, one of the strategies would be doing systematic Roth conversions. I should back up before I start talking about Ed Slott. Who this really applies to is going to be someone who's saved a bunch of money, and it's mainly in your tax-deferred accounts. 401k, IRA, SEP, Simple, 403b, TSP. There's others. Those are the big ones, okay? If you've got a big balance in any of those accounts and you are under the age of 73, you are still in the window of being able to make major decisions that could help you in the long run as it relates to how much you pay in taxes. Okay, so that's who we're talking to. Big balances in tax-deferred accounts under the age of 73. You're still in the window of being able to make a decision. But Ed Slott, we've played some of his audio before. The Roth conversion is like one of the loopholes that the government has kind of like left open, right? It actually doesn't really help them in the long run to let people do Roth conversions.
And why is it left open?
And it's left open because they need money right now.
Well, that and all the politicians want to convert their own money.
That's right. That's right. It's a two-pronged issue. Yeah. They need the money now, even though the perpetual grounding probably makes them more in the long run. And they want to be able to take advantage of getting their money over that tax fence.
They know what the plan is.
In a systematic fashion. And so I'd also just like to say that this is part of our full-blown retirement plan. We call it the tax map. If you'd like to see how much money you're going to pay in taxes in and through retirement if you make no changes, and you'd like to see what you can do about it to minimize the impact of what you pay to Uncle Sam, all you need to do is call our office, 770-741-0120, and you can tell them, hey, I want to see my tax map. 770-741-0120. I want to see my tax map. We will walk you through exactly what you're going to pay in and through retirement and what you can do about it.
To put a bow on that analogy, Aaron, spanking, pay taxes now. Get it over with. It's a little painful, but pay the taxes now. The grounding, yeah, it's not as painful, but you do have to pay the taxes later.
You'll pay more.
Is that fair to say?
That's fair to say, yep.
To get more information about that, 770-741-0120 to find the tax strategy that fits best for you. If you've done a great job in your retirement portfolio, you've got a good savings account, a solid 401k, you're lucky to have a pension, you have an IRA, that's where the power begins to start customizing a retirement strategy. Maybe you just need a second set of eyes, want to take advantage of that second opinion service. We invite you to call right now, 770-741-0120. We have a team member standing by. Of course, you can always get more at retireatlradio.com. Quick break and back with more. This is Retire ATL. It's all powered by the Vincent Financial Group.